Once again, welcome everyone. Thank you for joining us for today's webinar. I am Niveta from Relativity Management Solutions India Private Limited. I would like to invite Mrs. Geeta Murugan to talk about relativity. Mrs. Geeta is Associate Vice President and handling business development team at Relativity over 10 years now. It's over to you, ma'am.
Yeah, thank you, Niveta. Very good morning to everyone. I think today's session is a series of webinar that we are starting with this new year. And very happy new year to you all. If you haven't received our emailer on the new year, it's the time for us to tell you the very happy wishes for the new year. And today's session is the first part in the year-end compliances, which you will be hearing after 2 or 3 minutes of time about relativity that I'm going to speak on. The list of activities that we do is the compliance activities, payroll activities, QETDS activities, actuary compliance, CA and ROC services, tax compliance, all of its audits, and digital form 16. So these are the service lines we are into, and we are proudly known as compliance experts by our clients. The industry people recognize us as compliance experts. We are in the industry for 14 years now. We have started by 2008, and we are in the industry for 14 years now. Our values for our business is about quality, integrity, and excellence with the passion. See, we don't compromise. Someone says I can't hear anything. Am I audible?
Yes, ma'am.
Okay. Right. So quality is something that we don't compromise because the core of our business is into quality and the deliveries. The quality, we talk about on-time delivery, up-to-date information. One of the activities, this kind of webinars that we do for giving the informations to you and giving a prompt advice in whatever deliveries that we do and the services that we do. We give prompt advices and we do it on an integrity manner. We keep the things very confidential. Data confidentiality is our prime focus, and we are dealing with the data of other companies, so we don't compromise on the integrity part of it. And excellence with passion, we even look for the new recruits with excellence and passion in whatever they deliver. So these are three major values that we carry out in each of and every activities that we do: quality, integrity, and excellence in deliveries that we do. See, these are the services that we provide for large enterprises. When I say large enterprises, it means like about 1,000 employee sized companies. We deliver end-to-end ETDS compliance and its audits, and end-to-end management of payroll lodgement services, and Form 16 audits, digitalization and distribution, PF management and compliance activities. So these are a few service lines we do for large enterprises. And more importantly, I would say for large enterprises, it is not a standard services alone, because most of the large enterprises will be looking for customizations as per their requirement and their geographical requirement, or their industrial requirement, or their employee wise customization. These are some of the areas the expectation will be on the customization that we provide to the maximum, and we do all the services with customization. Yeah, these are the services we do for mid-sized, that is less than 1,000 employee size companies. End-to-end payroll management, right from the recruitment to full and final settlement, the end-to-end payroll processing can be done. And statutory compliance and its benefits, end-to-end ETDS compliance and audits and its compliance services, and end-to-end management of payroll lodgement services, Form 16, payroll process, compliance, consultations. All these service lines are for mid-sized enterprises that we do. Yeah, with small companies, everything right from your accounting registration of your company, right from the registration to everything that we deal with, payroll, taxation, compliance, and accounting, we can deliver. These are some of the facts. We are 14 years in the industry now, and we have crossed 155 clients and 12 lakh of transactions per quarter we do. And accuracy rates, as I told you, we are not compromising on the quality. It is always maintained above 99. And then we work with 16 cities majorly in India. And Form 16 issues we have done 4.7 lakh of Form 16s issued every year. And client retention rate is something very notable, which is 99.98% that we carry, which absolutely tells that the clients are happy with us, with our delivery. That is the reason for their retention rate. Next slide, please. Yeah, so thank you very much for the few minutes to talk about Relativity and its services. I hand over to the team to today's session. Thank you.
Thank you, ma'am. And I would like to introduce today's presenter, Mrs. Padma Jyoti. She is leading the team of payroll and taxation at Relativity over 13 years now. It's time to start our webinar. Let's start our overview, ma'am.
Thank you, Niveta. Thank you for the introduction. Hi all, very good morning to everyone and very happy new year to everyone. Once again, I am welcoming you for this webinar on year-end tax compliances in payroll, which is a part 1. And as Mrs. Geeta said, we are planning to do this as a series of webinar. January month we are going to do, this is a part 1, and we are going to do the next part in the month of March, and the final the third session that we are going to conduct in the month of May. As everyone aware, this quarter is a very specific to all the payroll and finance guys, because year end is coming and there are a lot of things is going to be happen, there are multiple statutory deadlines are there. And from the payroll perspective, if we ask, we have to collect the investment proofs and we have to validate, and the guidelines are the one of the thing. And there are certain activities which we have to be concentrated because we are going to close the tax computation at the month of March. And this webinar we are going to detailedly discuss about what and all things, major items that we have to concentrate while we are finalizing the tax computations. And also we are going to see about what are the preparatory activities that we have to take care for issuing the Form 16. Form 16 we will issue in the month of June 15. But before that, if we start from today, I think we will not have any last minute rush ups or last minute tensions that which we can avoid. So these are the items that we are going to discuss in detail, and there are some updates and due dates which is currently for this particular month, and the latest updates which have been released by the finance department. So that these are the agenda for today, and we are going to discuss in detail about this. So first thing, to concentrate on the tax computation, because as I said earlier, in the March month, we have to close the tax computation for all the employees. And if there was anything goes wrong, then the organization might have to pay some penalties or interest has to be paid. So to avoid such kind of penalties, what and all the things that we have to concentrate, that is the first item that we are going to look on. So in this first major thing is taxability of the pay components. So now it's a time to revisit what and all pay components currently we are having for our organization, for your company particularly. Please have a relook on it. and categorize whether there are three types of components which is available in the as per the defined in the act. One is fully taxable components, and there are partially taxable components, and there are fully exempted components. As you said, most of the components will comes under the fully taxable. Whatever amount that the employer, that the monetary benefits that employer pays to an employee, that will comes for the taxable bracket. So check whether the components have been mapped for the taxability and it has been calculated and the exemption have been provided appropriately. And next to the partially taxable component means the components like HRA, LTA, and we are providing daily allowances to maintain certain expenses for the official duties and conveyance provided for the disabled person. So these are the items will comes under the partial taxable. So first categorize under which whether this pay components will comes under which category. First prepare the list and cross verify whether these settings have been aligned with your payroll system, the payroll software which you are using. That is one thing you have to check. And if you having some clients, you have outsourced the payroll to a third party vendor. So have an eye on it and check with your service provider also whether this configurations have been mapped appropriately or right. And then we are seeing about a fully exempted components means there are certain allowances which is received for the Supreme Court judges. So those components will be fully exempted. So most of the time for the current audience which you are current audience in this webinar, I think fully exempted components will not be applicable for any of the organizations. And if you had a reimbursements, please make sure for all the reimbursements that you have paid, you have collected the bills or not. If you have not collected any bills and those values has to be taxed appropriately, we cannot show it as a fully exempted. We cannot give it non-taxable for that particular component. So first major item to be done is taxability of a pay component has to be checked. Manually we have to derive for each and every component, and we have to cross verify with our payroll software whether it has been defined right or wrong. So this is the first thing has to be done. And next item is income tax proof collection and verification. As you are aware, this time most of the organizations have already started collecting the proofs and they are in verification. They are doing the validation of the bills, and they will consider the same will be considered in the month of Jan, Feb, and March tax computations. So while collecting this proof collection income tax proofs, please keep some. We have to keep certain things in our mind. One thing is we have to provide exemptions based upon the latest amendments or the guidelines which is shared by the income tax department. Whenever you are providing certain instructions and you are finalizing the guidelines, right? Please check whether it is aligned with the latest amendment or latest circular released by the income tax department. In the last December month, mid of the December month, income tax department have released the detailed circular how the income tax computation has to be happened and what and all things that the employer has to consider for calculating the tax purposes. Please have, if you have already started the proof collection process, please have recheck it whether these instructions that you have provided already are aligned with the latest amendment, latest circular shared by the department. That is the one major thing. And the second thing is, as a best practice, most of the employees will come out with the queries. So it is recommended to have a strict deadlines. We will process this. I'm going to close this month. This is the last day to submit the proofs. Like that, have a strict deadline so that from the verifier perspective and the processor perspective, they will have enough time to validate the bills and provide the correct exemptions to all the employees. We have, and I have remembered some of our clients have received a notice from the department for the previous years, for the financial year 10, 11, 12, and the departments are asking the proofs which have been considered for the exemptions for next level of scrutiny purposes. So in future, this may be happen for you also. So please provide the necessary exemptions based upon the valid proofs. Without any proofs, if we are providing exemptions, then it is an employer liability to take care of any if there are any penalties or default raised by the department, then the employer has to take care of it. So based upon the proofs, provide the tax exemptions and all. And in this month, as I have mentioned, we will recompute the taxes based upon the proof submitted by the employee. That is one thing. And before processing the payroll itself, it is better to release the mock TCR or and a mock TCR like that, so that employee will also have a will also know what is the maximum tax that is going to be deducted in the month of January or February, in which month you are going to consider. It cannot be a last minute surprise to them. So if we provide these informations earlier, then we might receive the employee queries will be received at least in 1 or 2%. It will reduce. So it will be a huge thing when we are doing for the large end. If you have an employee size more than 5,000 something and all, and it will reduce 1 or 2%, query will be reduced, and this will be a big from the processor perspective, they will have enough time to process, and they will have enough time to handle the queries also. So this is the this one of the major activity in year-end is income tax proof collection and verification. There are multiple things we have to concentrate. First thing is whatever the guidelines or the instructions that we have provided to the employees has to be aligned with the department guidelines, which department circular, which has been released in the month of December. And this is the second item we have to be very concentrate. And the third item is inter-entity transfers and rejoining tax computation. So we will have in certain organizations will have multiple in a group of company, they will have multiple subunits. So they will have this inter-entity transfers, and in some and we also have rejoinees. Rejoining means in this fiscal year itself, if we take in the financial year 22-23, the employee worked until June and they will leave the organization. After that, they are rejoining in the month of December. So that they are going out of the organization and working somewhere and getting back to the same organization. These cases we have to concentrate specifically, because as per the circular or the guidelines given by the income tax department, tax computation has to be processed for the whole year income that has been paid to the particular employee. If you see, for example, in from April, in the case example which I have mentioned earlier, from April to June, if the income is 5 lakhs, and after December, if I am rejoining and my income is coming as 16 lakhs, 16 lakhs is my income, then the employer should not calculate tax only for the latest employment. The employer has to consolidate both the income which has paid to that employee for that fiscal year, and we have to recompute the taxes. So in some softwares, in some processes, they have been, it will be considered automatically, but as a best practice for in rejoining case, it's better to have a tax better we can do a manual check how the tax computation have been done. And the same will be happen for the inter-entity transfer. So if you think as an individual, for me, I'm working for the one particular group company. I'm not, I don't have any distinction between whether I'm working for the sub-entity A or B. But from the processor side, we have to consolidate the whole year income, whether they are getting whatever that they are getting from the entity A and the income that they have been earned received from the entity B. Both put together, we have to consolidate both the incomes and we have to calculate the tax necessary. Otherwise, it will be an additional burden for the employee, and they might have to pay some additional taxes while filing their individual tax returns. So it will lead to a disengagement. The employee satisfaction will be reduced. So kindly check for an inter-entity transfer and for the rejoining employees. Please check the tax computations once again manually, so that you can able to so that if there was any differences has been identified, that can be adjusted in the month of Jan, Feb and March, and we can deduct the taxes for the whole year. And also for these cases we have to check whether the exemptions under sections have been under section 10 have been provided appropriately, because while doing the final settlement of the earlier item for rejoinees in the month of June, we might collect some proofs and we have provided certain exemptions. And for again, if they are going to rejoin, and they will submit some of the additional proofs in the month of January. So we have to see whether the proofs have not been duplicated. The same proof we cannot consider twice for the exemption, right? So we have to check whether the exemptions have been provided only once, or if it is have been done twice, then we have to do the manual changes and we have to calculate the taxes appropriately. And the third thing is valuation, and the fourth one is valuation of non-monetary benefits. So here the non-monetary benefits, we will the employer is providing any benefits that they are providing to the employee will be considered as a non-monetary benefits, which is not in the mode of cash, which is not easily transferable to the mode of cash. So those things we will call it as a non-monetary benefits. For example, food coupons and car lease and rent accommodations and other these items and all, that we are paying it on a monthly basis. Whenever that we are providing those kind of benefit, we will tax it appropriately. That will happen on a monthly basis. But there are certain items which we have to concentrate on the year end for the non-monetary benefits calculations. So I have listed down the three things. These are the non-monetary benefits that we will evaluate at the end of the year, because these values we cannot do it in the year starting also, so we will do it in the year end. So first thing is interest-free or concessional loan. And the next interest-free concessional loan is employer will provide a loan, which they will provide it in a lesser rate, or they will provide it in a 0% of interest. So that is one item. And the next one is employer contribution towards the retirement benefit more than 7.5 lakhs per annum. So we have to recheck whether we are doing any employer contribution is towards the retirement benefit more than 7.5 lakhs. If that manual check has to be done, and we have to calculate the perquisites appropriately. And next one is that annual accretion for the excess contributions. Whatever the excess contribution made by the employer, and from that whatever interest I'm getting out of that particular fund will be considered as a taxable. So these three items has to be perquisite valuation has to be done in the month of March or Feb, whatever it is. So this interest-free loan and all, most of the time we will do in the month of March. So only we will have the overall the year projection and what is the value of the loan that the employee have been taken. So these things that has to be concentrated in the month of March. So I will explain you detail how it has to be done. So first thing is interest-free or concessional loan. In the employees, if we are paying a loan to an employee and we are getting as a EMI on a month-on-month basis, this interest, even if the employer is paying at a 0% of the interest, that if I am going for the outside, I have to pay certain interest rate, right? So that value will be considered as a that value has considered as a benefit, and that benefit has to be evaluated. We have to determine the valuation and we have to tax it appropriately. So for this calculation, we have to consider the lending. We have to consider the interest rates as per the SBI lending rates, and it has to be computed appropriately. And so first we have to calculate the interest as per the SBI lending rate, and if we have recovered any amount, that has to be less and the balance has to be taxed under the perquisite head. So this calculation, which interest-free loan, concessional loan, interest-free concessional loan perquisite valuation, which can be done in the month of March, because until March month we will do this loan recovery. So based on that only we can derive this interest computation. So this one item which has to be done in the month of March, that is first thing. And in the perquisite non-monetary perquisite valuation, and the next is employer contribution towards retirement fund more than 7.5 lakhs. So from the in the financial year 2021, income tax department have introduced one amendment, like if the employer contribution, if it is more than 7.5 lakhs, then the excess amount whatever that they are contributing will be considered as a non-monetary benefits. Earlier there is no cap for the employer contribution towards the retirement fund. For example, there was an internal cap within these three funds. In provident fund, maximum we can do 12% of basic, that is the maximum cap. And for the superannuation, it is a 1.5 lakhs per annum. And for national pension schemes, maximum employer can do 10% of the basic. So these are the maximum cap that each fund have separately. And from the financial year 2021, department clubbed all these contribution and they have made the upper cap as 7.5 lakhs. If it is more than 7.5 lakhs, then then the excess value has to be considered as a non-monetary benefits. So I have mentioned an example how it has to be calculated. So here I have mentioned the employer contribution for provident fund is 3.5 lakhs per annum, and superannuation is 1.5 lakhs, and national pension scheme is 2.95 lakhs. So we have to sum up all these three and we have to see if it is more than 7.5, then the exceeding amount only has to be considered as a perquisites. In this case, it is 50,833. In some, as a best practice, in the year starting itself, most of the organization will project these values because they know what will be the higher employer contribution towards PF and what will be the maximum contribution that employer will do it in superannuation and national pension scheme and all. So they will project it in the year starting and they will consider it for the perquisite and they will deduct the taxes in the regular basis. And this in the year end, in the month of March, what we are supposed to do is we have to recheck one time whether these computation have been done correctly or not, because the employee might get the salary increase or they might opt out for any one of the schemes which is there, like national pension scheme or superannuation. If there is an option opt out, they might disengage with those funds, right? So we have to recheck it whether they have crossed 7.5 lakhs or not in the month of March, and then we have to decide on then we have to check whether the calculation is done appropriately or not. So only the excess value has to be considered as a perquisite, not the 7.5 lakhs. And we might most of the times employer will have a confusion. These contribution are the employer contribution, not on the employee contribution. There is another amendment. If an employee contributes more than 2.5 lakhs in the provident fund account, then the for the whatever the interest that they are getting from that corpus for the excess value, that is taxable. So that thing the employee has to take care in the individual tax returns filings. For that, for the employee PF contribution, employer doesn't have any visibility whether it is taxable or non-taxable, what is the interest that they have earned from that fund. So those visibilities employer doesn't have. So those that ownership will rise with the employee itself. Employer will not have any ownership on the employee provident fund if contribution is more than 2.5 lakhs. Here there was only here whatever the employer is contributing more than 7.5 lakhs will come into the employer responsibility. They have to calculate the taxes appropriately. And next one is, this is annual accretion for the excess contribution. In the previous example I have showed, right, there was a 50,000 exceeding amount that have been contributed. For the employer contributed 50,000 more than the 7.5 lakhs. So for that 50,000, whatever the interest or dividend in any manner that employee is getting growth, right, that value will be also taxable for this computation, which can be done in the month of April. In the April starting only, we can do this calculation, because as per the income tax department provided a formula, and they have given a methodology how it has to be computed. In that methodology, it has been clearly mentioned that we have to take the opening balance and closing balance of the that financial year. So this calculation has to be done in the month of April, and it has to be complete. This valuation has to be completed before the month of April ends, and we have to calculate the taxes appropriately, and we have to pay it to the department before April 30th itself. Otherwise, there will be a late payment, and the company has to pay additional interest for that. So this how we have to do it, we will explain in the upcoming series of the webinar, because right now this calculation will be done in the month of April, right? So we have planned this to be discussed in detail in the March month webinar. So, but this is one of the important action item that we have to take in care of it. So these are the major items that we have to concentrate while doing the tax computations. Once we complete the March month payroll, please check your tax computation report once again, whether the taxes has been calculated appropriately as per the new tax regime. The tax for employees who opted for new tax regime, whether tax rates are different, check how the taxes have been calculated, and for old tax regime also, please check how the tax calculation has happened, whether it's as per the income tax slabs or not. So these are the checks that we have to do in the month of March end, to avoid any short deductions, any short payable that we are going to do it with the tedious department that we have to deposit. And the next item is, once the year end closure, then we have to start for the Form 16 issuance. So to be prepared for the Form 16 activities, it is better, we cannot go and do it in the month of March. So we have to have certain items, we can do it pre-planned. We can do it before the quarter end itself. So I have listed down certain items which we have to be taken care, and which will have a very impact on it. And first thing is, we have to prepare the list of employees to whom we have to issue the Form 16. Because based upon this master list, we have to check whether finally while we are closing this activity, we can check whether we have issued for all the employees or not. So first item, please check the master list. And this is and also in after filing this Q3 returns, please prepare a reconciliation between the payroll reports versus the data which is reported in TDS returns from Q1 and Q2. If you find any discrepancies, please undertake the corrections and close it off. While you are generating a Form 16 and you issued the Form 16 to an employees, and if employee find out if there is any mismatch between the part A and part B, then at that least time, if you are going for a correction, sometimes traces will kept on the hold because of the huge volume and huge data that they are going to receive in that moment. So to avoid the last minute rush up, so we would recommend you to do the reconciliation in this quarter itself, that is before March end itself. And if you find out any differences if there is any discrepancies that has been identified, that you have missed out the sum of the TDS payment, those things and you can take care of it in this financial year itself. If there is any change or any corrections that has to be done, please undertake the corrections before the March end itself. And once the April month is came, and if there was any changes, and we can go for the regular filing and we can issue the Form 16. And the other one thing is, we have to keep a track on the latest changes which has come in the Form 16 and QTDS filing reporting. Currently, till now, there was no updates or no changes have been proposed or introduced by the income tax department or from the NSTL side, no updates have been provided, but we have to keep a track. So I would recommend you to join in the March month webinar also. So if there was any changes or any updates have been done, released by the department, we will cover those items in the March month webinar. So right now there is no change in the Form 16 template, and there is no changes in the reporting format also in Annexure the Q4 returns, the annual returns also, there is no reporting changes. So as per the current requirement, please check whether the Form 16 template that you are getting from your system, it's matching with the requirement provided by the department. If there is if the template is not matched, please reach out to your software vendor or your payroll service provider and make the template is ready. So it has to be matched with the template which has been released by the department. So these are the items that I want to cover in what and all things that we have to concentrate on tax computation and how we can be better prepared for the Form 16 issuance activity. And next thing is I'm going to tell about the major due dates which is coming in the month of Jan 23. It's just a highlight for you. So first thing is, because we are having multiple holidays, and please ensure that you have filed the returns on the same timeline. The tax returns, that Form 27 EQ, that is tax collection at source, has to be filed on or before the 15th January. And that is one thing. And Form 24Q and 26Q and 27Q has to be filed before the 31st January. If you miss out these due days, then there will be a penalty for every day of delay in filing, ₹200 per day. So every day there will be additional penalty has to be done. That is one thing. And in the previous webinar, we have said about there was an update from the SEZ zone. Before this January, we have to provide the list of employees who are working from home has to be shared to the development officer. As per the notification, that due date is 31st March. If you are in SEZ zone and you are having a work from home option, then please provide the list to the development officer of that particular SEZ zone on or before the 31st March. And next important, there are payment due date is LWF payment. For Karnataka, it has to be done on 15th Jan, and Tamil Nadu, it has to be done before on 31st Jan. So these are the major due dates in Jan 23, which is in reporting. From the perspective of payroll, I'm telling, there are other due dates, which is the tax payments due dates are already over, which is on 7th, and there are GST deadlines also is there. So this is as per under the preview of payroll, I'm telling about the due dates. And the next thing is, next we are going to see about the latest updates. There was one major update which will have a impact for all the individuals. I'm not telling about the organizations. It's an impact for the individual, because earlier there will be for every year there is a specific financial transactions will be reported by the banks and mutual funds also, and from the many agencies they will report these kind of filings. So you can able to see in your Form 26A is what are all the SFT transactions that has been recorded for that particular year. So from the banks, earlier the banks has to report only if the interest income is more than ₹5,000 per annum. Now the department have abolished the interest income limit, and they have mentioned if you have received more than ₹0, that has to be reported under the SFT transactions for all accounts, like savings, for all kind of deposit accounts has to be reported, excluding the Jandana account. Some other any bank accounts, if you are going to receive any interest income, that will be reported, and the same will be reflected under the compliance portal in income tax website. So this is one of the major update that have been introduced by the department in the last week. So this is all about session. If you have it, so I just ran a poll about I'm just running a poll. Please give your feedbacks. In the meanwhile, if you have any questions, please put it in the chat box so that I can able to reply to your question. I'm requesting you to provide your responses, because based upon your responses, we can do better webinars in the upcoming month, and your responses will be very helpful for us to understand what are the benefits of indulging in fiscal responsibilities. Thank you for your responses. So I will go to the Q&A, question and answer. From Rajesh, I have received, can you please share the income tax circular to us? We will share the income tax circular to everyone along with this webinar PPT. And what is the perquisite need to be charged for concessional loan for financial year 22-23? So this is for interest-free loan that you are asking, no? So what we have to do is, if we have provided any loans to our employees, and most probably from the employer, we will deduct only the principal amount, and we will not recover any interest like that. So we are providing at the 0% interest, right? So if the employee is going and getting a personal loan, then they have to pay at least 13%. There will be X percentage of the interest that the employee has to pay. So that interest will be calculated as a perquisite, and the calculation, that for calculation purpose, we have to take the interest rate which is provided by the State Bank of India. So that is available in their website. Based on that, we have to take the percentage and we have to calculate. Like PF and NPS, whether superannuation contributed by the employee, do the employees have any tax exemption for that? Superannuation from employees, they are going to do, they will take the policies, right? Like life insurance policies, something they will take it for the retirement also. So those kind of policies will be exempted if the contribution that they are doing, that will comes under the chapter 6A deductions. That under the ATC, they can claim maximum of 1.5 lakhs. That is all put together, the values, whatever the benefits that we have, the list. So in that, they can take it to maximum as 1.5 lakhs.
Like PF, do I need to contribute to gratuity? Will it deducted from salary? So gratuity is a contribution that employer is paying on actuarial basis year on year, but the employee can realize once while they are relieving. If they have completed 4 years 8 months service, then only they can take out that value. They can get the benefit from the employer. So that amount will not be considered as considered for the contribution value. Retirement benefit contribution, gratuity will not be considered, and gratuity will comes as it's a retirement benefits we can provide to the employee. So it's not about like other contributions we cannot consider gratuity for the calculation purpose. We have come to know that the LW has been revised effective from December 2022, which is rupees 20 from employee and 40 for employee. Can you please explain about this? We know actually till last year, the Labor Welfare Fund contribution in Tamil Nadu is 10 and 20. Employee will contribute 10 rupees and employer will contribute 20 rupees. But from this year, they have changed this. They have changed the contribution rate. Employee has to do 20 rupees and employer has to do 40 rupees. So these kind of updates will be provided on our every month, our monthly webinar. So I would request you to join on the monthly webinar regularly so that you cannot miss any update. And from Rajesh, I have received another question. Section 80 EEA for claiming additional housing loan benefits. There are several conditions and one of them is stamp duty. Just is the stamp duty of residential house property does not exceed 45 lakhs. The query is here whether it is stamp duty or house value. It is a stamp duty. We cannot consider the house value as per the documentation and what is the residential value, property value have been mentioned. Based on that only we will consider. It's on a stamp paper value. Is it compulsory for the company to pay gratuity to all employees who serves 5 years at a particular company? Yes, it is mandatory. If an organization have an employee strength more than 10, if they are having more than 10 employees, then they are eligible. Then they are applicable. They are comes under the Payment of Gratuity Act, and it is mandatory to be paid for all employees who have completed the service 4 years 8 months. That is 4 years 240 days. If they have worked with your organization, then it is mandatory recommended to make the gratuity payment. And 80D medical insurance, there is a provision if anyone has not claimed the medical insurance, then for senior citizen, the medical bills can be claimed as equal to the 80D limit. Clarification required here whether the normal medical bills can be claimed under this section, or what are the supporting documents required. Okay, in this medical insurance itself, there is one information that I want to provide. For example, if one individual who's having a medical insurance, then they are not eligible to claim the expenses. If they had if I'm having a policy, for example, if I had a medical insurance policy for my mom, then I cannot claim whatever the medical expenses that I have provided to her, that have been done by my side. Okay, so if the individual doesn't have a medical insurance, then only they can claim for the medical expenses, And for medical expenses, we can consider the medical bills and also the regular checkups, whatever the expenses that we have done, that we can consider. But one thing is, in the bill, particular parent's name has to be there. So that is the major thing that we have to check. And also the age limit has to be crossed more than 60. Then only we can claim for the medical expenses. Gratuity at 4 years, at 5 years of 5 years or 4 year 8 months. Actually, Mr. Ajay, gratuity is payable if the employee served at least 4 years and 8 months. There was a court rule also, if the employee, because how it will be calculated, no, the 240 working days in a year. We will have a 50 Saturday, Sundays, and all the leaves will go off. So it's if an employee completes 4 years and 8 months, then it is recommended to make a gratuity payment, and they are eligible to receive the gratuity payment. Please explain regarding NPS employer share, how it is benefit to employer and employee. For employer, I think there is no benefit. Instead of they are making it as a compensation, they are paying it to the NPS account. That's it. That is the one thing that they are going to do. But for the employee, from their total compensation, they will get an additional exemption until 10% of basic. They will get an additional tax benefit. That's the one thing. If employer pays interest-free loan of 1 lakh to an employee for 6 months, but the amount is not paid and shown in pay sheet, so will it be applicable for TDS? How it will be calculated? Whatever the loan amount that we are making up, we are paid to an employee, that will not be considered for the tax purposes. Only the salary advance which we have paid for the upcoming salary advance will be considered for the tax computation actually. And if employee doesn't make any repayment to that loan, and we have to calculate the perquisite value, because we are providing even if they have not made any repayment, still the interest will be calculated, right? So we have to calculate the interest for the whole amount, and we have to calculate the we have to consider as under the perquisite, and we have to deduct taxes on tax for that particular value. For the whole 1 year, 1 lakh, we will not calculate the tax. From Ajay Kothare, I have received again for gratuity 240 days class applicable only he completes first 5 years, isn't it? Actually, there was a case law. We will forward it to you. I think that will give a better clarity, because even if they haven't completed 5 years and they have completed 4 year 240 days, then it's mandatory to then it's mandatory to make the gratuity payment. Just now you mentioned about medical bills under section 80D. What is the limit for same? Like medical insurance, for medical expenses also, the upper limit is the same. For senior citizens, it is 50,000. And we can claim medical expenses only for the senior citizens. And the last question, for setting the telephone LTA and LTR wheel voucher limits, the employees, is there any act guidelines or as per the Income Tax Act, or can company fix any value for their employees? For telephone, it's based upon the company requirement that they can set up, they can fix up the values, because based on the requirement for that particular work has to be defined, and then we will set up the higher limit. And for LTA, as a best practices, everybody will provide 10% of basic towards the LTA. So that is as per the best practice. And for meal voucher, you can provide for whatever the values, but the exemptions will be provided only for the 50 rupees per meal. 50 rupees per meal only, the exemptions will be provided. You can provide For example, 150 rupees per day also the company can pay to the employee, but the tax exemptions will be provided for the 50 rupees. I think I have completed all the questions. If you have any questions, please put it on the chat box. If not, we will close the session. Thank you for your valuable time. Thank you once again.